August 6, 2024. A day that will be etched in financial history. On this day, the world's financial markets were brought to their knees. The catalyst? A single, unprecedented decision by Japan's central bank.
Another big story we're covering for you today, and stock markets around the world are in turmoil this Monday after a massive sell-off in Asia. Tokyo's Nikkei index saw its worst day since 1987. Trading on the Kospi in Korea briefly halted due to the volatility. The loss is driven in part by interest rate hikes at the Bank of Japan. Investors, though, are also...
To understand the gravity of what happened, we must first understand the context. Japan, the world's fourth largest economy, has long been a cornerstone of global financial stability. For decades, the Bank of Japan, BOJ, maintained an ultra-loose monetary policy with negative interest rates and a massive bond-buying program. This strategy, aimed at combating deflation and stimulating growth, was seen as a necessary evil by many. We also need to understand a key financial strategy known as the carry trade. For years, traders around the world had been borrowing money at extremely low interest rates from Japan, where the Bank of Japan maintained near zero or even negative interest rates. This made borrowing money in Japan incredibly cheap. Here's how it worked. Investors and traders would take out loans in Japanese yen, benefiting from the low cost of borrowing. They would then convert that yen into other currencies and invest the money in assets that offered higher returns, such as stocks, bonds, or real estate in other countries. The carry trade was essentially a way to profit from the difference in interest rates between Japan and other countries. It was highly lucrative for traders, especially in a global environment where yields in other markets were much higher. This strategy was popular because it allowed traders to leverage Japan's monetary policy to amplify their returns in other markets. However, it also meant that global financial markets became heavily reliant on Japan's ultra-loose monetary policy. But there was a downside. As more and more money flowed out of Japan and into other markets, a massive amount of leverage built up in the global financial system. The carry trade was profitable as long as Japan's interest rates remained low, but it also created a ticking time bomb. On August 6, 2024, when the Bank of Japan announced an end to its negative interest rate policy and scaled back its bond-buying program, the carry trade unraveled almost instantly. Traders rushed to unwind their positions, selling off assets and converting back to yen, causing markets around the world to crash. The reaction was swift and brutal. Within minutes of the announcement, Tokyo's Nikkei 225 plunged, triggering circuit breakers. The panic spread like wildfire across Asia, Europe, and finally to the United States. By the end of the day, trillions of dollars had been wiped out from global markets. The collapse didn't just affect stock markets. Currency markets were in turmoil, with the yen soaring and other currencies plummeting. Bond yields spiked, and emerging markets faced massive capital outflows. The shockwaves hit every corner of the globe. In the days following the crash, governments and central banks around the world scrambled to respond. The Federal Reserve, European Central Bank, and others were forced to intervene to stabilize their economies. This crisis has made it clear that no country can afford to act in isolation. We need global cooperation to prevent something like this from happening again. August 6, 2024, was a wake-up call. It reminded us that in an interconnected world, the actions of one nation can reverberate across the globe. As we look ahead, one thing is clear: the world of finance will never be the same. If you like this video, please like and subscribe for more.